So this is another thing that I always was interested in because, when you're a business owner, you're always trying to, keep as much money as you can and try to make the biggest difference in your financial life. So, when it comes to different businesses, they all set up different. Yeah. And certain ones kind of lean. So where I'm headed with this is when it comes to write-offs, a lot of people want to write off this and that. And I know when you write off something, it has to kind of make sense.
Absolutely.
And where I'm headed towards is vehicles.
Okay.
So I know I guess they have some type of section or some area in the tax code where it allows you to write off vehicles. I think I read a little bit about it, about weight and all this kind of stuff. How does that work?
So you have two types. And the reason why I always like to mention two types. You can buy a business under individual, or you can buy it under business. What you're referring to is under business. Mm-hmm. Individual, you can write off your sales tax, and you can also write off your first year taxes in that first year you buy it.
Really?
Used vehicle, just the sales tax.
Wow.
But you're capped at $10,000. So the IRS, until they make that change, is right now capped at $10,000 between your individual taxes withheld, your real estate taxes, and those sales tax. Mm-hmm. Now, the business is what you were referring to as Section 179. Mm-hmm. And you're able to write off the vehicle up as long as you're using it for 50% or more in your business, 6,000 to 14,000 pounds on a vehicle. Mm-hmm. You can write that off, and you can totally write off that vehicle purchase. Now, the problem that you run into that I always like to give people, there's a pro, that's the great side. The con is that you're doing actual. So they have what you call mileage and actual. If you start with mileage, you can always flip-flop back to actual. Actual is your depreciation. If you did not, the write-off of that vehicle, depreciation, the gas, the repairs, and different things of that nature. But if you start with actual, you can never come back to mileage. So if your business changes and you start to travel a long distance, then now you just forego all of those write-offs on that mileage. And mileage is that like I think 57 cents a mile almost.
Wow.
So that's a good amount of money.
One quick thing that you made me think about when you said that is, are there any types of businesses that people own or run that maybe not be eligible for that? So if you have a delivery service, obviously you're eligible for that. But what if you don't have something like that? Are they still eligible? Like someone who's maybe they work stationary. Mm-hmm.
Stationary, those type of persons, I always look at, if you have a business and you're stationary, you're not going to be driving as much, I offer you to look at a lease more than trying to purchase the vehicle, because now you can write off those lease payments up to a certain percentage. I would not write it off 100% because you're going to go to the store every now and then to pick up some milk or some bread. I would write off the lease payments up to a certain percentage. So there are certain businesses that will have more advantageous because they're driving more or they're using the vehicle more. Companies such as have a fleet, they cannot write off the whole amount of their vehicles. They want to go ahead and use those to write off, such as mileage and different things of that nature.
Oh man, I like it, man. I'm already learning a whole lot already. If you enjoy this content, if you like it, please think to tap the like button below, subscribe, and share this video with people that you think would be interested.